What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Will and Ben here today giving you the wrap-up of what's been happening in the news. Ben, how's your week?
Yeah, pretty good. Lots happening.
Lots happening at
Probably
the
not
moment.
The busiest week we've ever had in terms of news, but still plenty of interesting stories.
Yeah, lots going on. And Will, how about you? You're doing a lot this week with the news.
It's been good, yeah. As Ben said, kind of not quite as hectic as last week, but enough to be getting into, yeah.
Keep us taking over. And like some really big stories, actually, I think, coming out. Lots of focus on the lenders this week. And one of the big stories, I think, that came out this week was all about ANZ. I feel like we've been talking about ANZ a lot recently, but after all of the massive announcements they had last week, where we were talking about the mass redundancies that were happening, the restructure, they made headlines again at the beginning of this week as it was announced that they were going to be, accepting, firstly, penalties from the federal court of up to $240 million across 4 separate proceedings that they've been facing in relation to a lot of different things, really. But mostly, I think for us, kind of things that were including unconscionable conduct, some things around interest being charged incorrectly, lots of juicy gossip here. Not really gossip. Lots of juicy stories here. And Will, you were writing these stories. So give us some of the headlines. Like what was happening? What were they found to have done? What did they say they were doing?
Yeah, I mean, there's loads in there. So 4, as you said, 4 separate proceedings, and that spanned across its institutional and retail divisions. Some of the specifics, so around deceased estates. So they failed to refund fees charged to dead customers.
Never good.
Yeah, bonus interest issues. ASIC said that ANZ made false and misleading statements about its savings rates and failed to pay the promised rate to customers. Also issues around a bond deal with the government.
That's a big one.
Yeah.
The AOFM. And they actually were talking about overstating volumes by billions, tens of billions of dollars, I think, actually.
Yeah.
For a government bond. And the weird thing about this is, like, there's not been much commentary on this from government. And they're like, yeah, that happened. Okay, that's happening. But, like, literally zero. Nothing.
Yeah. I wonder if it's because it's almost embarrassing for them. They'd rather not draw attention to it. And ANZ actually, we should say, so they claimed on, was it Monday or Tuesday? But they basically released a statement apologising, saying that there was no loss to the Commonwealth. And then this week, ASIC have essentially refuted that and said that actually there was a loss.
Yeah, whoops.
And it was substantial. They
Huge.
said a $26 million loss because of the bank's poor conduct that the government had to pay.
Thanks for that. We all appreciate it. But yeah, I think like talking about this, so like I think the regulator was sort of talking about what was happening, and they were saying that ANZ were misleading and deceptive, and it misled the government about its trading turnover for nearly 2 years. These are damning like reports coming out here, and obviously, you know, the fines coming along with it, huge. I think it was some of the record fines for a single entity. Yeah, $240 million. A huge amount of money. So ANZ's media team this week have been extremely busy. Well, this month really been extremely busy, and obviously, you know, having to work overtime with all of these major announcements coming out, but really interesting seeing. And also I think interesting seeing that ANZ accepted a lot of the allegations that were put towards it. If you haven't read the story, I would definitely recommend going and checking it out, because there's a lot in there. It's a huge amount of work that obviously like they've had to go through to look at all these different legal proceedings. But yeah, really, really interesting, and obviously not a great day for the bank having to deal with all of this. But the fact that they've kind of said, you know what, we're going to be paying this fine, and we agree to a lot of the allegations, and they're accepting it, kind of, you know, at least we can all move on from here. But wow, that was a big story this week.
Yes.
Start off the week with a bang.
Yeah.
In not the greatest way possible, but yeah, lots of different really interesting things there. And I think particularly in the home loan space, looking at the bonus interest is probably most interest for us. So whether or not interest was being charged correctly, whether offsets were being set up correctly, looking at financial hardship notices. I think there were some cases there. They were saying that the bank was still charging fees to people when they'd applied for financial hardship, and then actually in some cases issuing default and demand notices without actually having actioned people's requests of financial hardship. So lots of problems here, and probably again goes to why the bank is restructuring, because they've got a new CEO coming in. They've got a lot of, as we talked about last week, a lot of changes going on with the restructure. And I think a lot of it will be looking at where have these problems been arising from. These are all kind of historical problems. Where have these problems been arising from, and how can we fix them to make sure they don't happen in future? Now, most of these issues have already been addressed, but really interesting to see.
Yeah, and I think ASIC made the point that I think there's 11 civil proceedings now since 2016, and it's part of a bigger cultural issue around the bank not following rules, essentially.
Yes, so we look forward to the 30th of October when they reveal their new strategy update, what that looks like, what the new structure will look like, if it's going to be changing at all. But our assumptions are they probably will. So that was a big story that we had this week. Another major story was the new climate report that came out. So this has been something that's been in the works for a while. It's the first national climate report we've seen coming out from the government body. What did this tell us?
Yeah, I mean, it's a massive report, I'd say, loads to unpack. And it does cast quite a bleak picture of climate change. And there's actually quite a bit around housing and the impact on housing. Essentially, they model a 1.5 degree rise in the temperature, a 2 degree rise and a 3 degree rise. And kind of the damage related losses to housing. So in the worst case scenario, housing values would drop by 571 billion by 2030, which is terrifying.
That is in 5 years' time.
Yeah.
And $500 billion being wiped off. But this is only if in the 3 degree scenario.
That's the worst case scenario.
Yeah.
So
if I mean, fingers crossed, temperatures don't rise by 3 degrees in the next 5 years, because we've got much bigger problems if that's the case. But, you know, value of property going down, obviously a big problem for our readers.
Yes. And there's lots around kind of insurance, essentially, with stuff like flooding is going to become a bigger risk. Obviously, bushfires. Also, it's interesting that because of coastal areas, which actually generally, you think of Sydney or Brisbane or property values will actually be kind of more affluent areas nearer the beach, that it's not just going to, I think it's suburbs will be affected kind of not in the same way. And actually some affluent suburbs will drop in value the most. I thought that was quite interesting.
Yeah, because a lot, of course, in Australia, like most of our population is around the coast.
Yeah.
And so if there's lots of coastal erosion, if there's lots of flooding and winding.
Winding.
Flooding and winding.
Wind damage.
Yeah. If there's loads of flooding and then also wind damage and coastal erosion, like, you know, if cliffs are collapsing, see landslides, lots of problems. And of course, with most of the population being on the coast, that's a lot of people are going to be impacted. But the insurance issue was interesting, and not only from a property and consumer perspective, but I think also from a lending perspective. Yeah,
essentially. And this is something we've already kind of spoken about on The Advisor, and I've been seeing, but the more underinsured or just uninsured properties will get much worse. I think the expectation is that it'll accelerate the rate of underinsured properties. And I remember you wrote it was around the time of the California wildfires. That insurance is going to go up, which will have a knock-on effect, drop property values, and then some areas will just become
uninsurable.
Yeah, uninsurable.
Yeah, I mean, and that's the kind of case at the moment. Like, just to make it personal for myself, like, you know, we had a huge amount of rain last week. Was it last week? This week?
Last week.
Last week.
Yeah.
And I had my house partially flooded.
Yeah.
And it happens every single time we have more than like 100 mils of rain. I think that's where like the barometer is for our house. But we're in a flood zone and we're in a fire zone, which is really fun. But it means for us, like, our insurance is quite high.
Yeah.
And I'm like, actually, if we have, you know, even 1.5 degrees of warming, I'm like, that's a lot. I don't know what's going to happen to our insurance. Like, we probably won't be able to afford it anymore. And this is what's happening, I think, across the board. People seeing their insurance premiums going up. And that's one of the first things that they're sort of having to drop, because they're like, I actually can't afford it. But of course, if you don't have proper insurance, then you're, you know, invalidating your mortgage, or in some cases not able to get a mortgage at all, because the insurers will say, the lenders will say, if you can't get insurance, then we don't want this property.
The report also actually, it does go into quite a lot of detail around insurance, without wanting to get too detailed. It kind of spoke about, you know, these acts of God. And I think flooding sometimes falls into, you know, it's actually not covered by insurance if it's a complete freak incident.
Yeah.
And there's a bit of a grey area around what your home insurance would cover. And I imagine flooding, say in Sydney, would be, but like, say if there was a freak incident, and these are going to become more common with climate change, who bears the risk of certain, climate risk?
Yeah. Well, the whole report, I mean, was super, super depressing. So thank you for reading it and taking one for the team and kind of being miserable that whole day, just being like, well, this is great. But it was really interesting to see. It's the first time the government's had this kind of major report. And the report basically is sort of saying, well, this is what we predict would happen in these different scenarios, and hopefully giving a coordinated sort of overview for state governments and local governments and federal government to look at and be like, what sort of action can we be taking to really not only mitigate, but like to actually prepare for this? Because I think now it's no longer a question of if the climate's going to change. It's obviously it's changing. What do we do in these different situations and what's it going to look like? So I think the government is now looking at putting together a plan around climate change. And they were talking about that this week, weren't they?
Yeah, so they've released a national adaptation plan, which is kind of a policy framework around how it plans to respond to risks, and it's working with state, territory and local governments on an action agenda. There's not actually much detail around that yet.
No, we've got a plan. We don't know what it is.
Yeah, it's almost planning for a plan.
Yeah.
And then obviously, Thursday, they announced that their 2035 emissions reduction target is 62% to 70% of current levels. And they described it as the maximum level of ambition, and they have come under a bit of flack from climate campaigners, politicians, saying it doesn't go far enough. Essentially. So it's lower than I think what would have been expected.
It's a difficult one as well in Australia, I think, because like so much of the economy is tied up in quite resource intensive industries. So things like, coal, mining, or we've got a big gas sort of industry as well. So I think steel, like looking at everything, even cattle, we know that's a huge emission of CO2, but like a lot of Australia's primary and secondary industries, very, very resource intensive. And that makes it quite difficult to balance, I think, emissions targets when you do have a country that is so reliant on creating carbon dioxide.
Yeah.
But it is also quite vulnerable to natural disasters. So it's a difficult balance for the government, I guess.
Yeah, it's sort of politically unpopular.
Yeah.
But economically popular.
Yeah.
We'll take a quick break here. When we come back, we'll be talking about some more cheery news in the terms of what people are saying about their house buying intentions, but then also some genuine cheery news of what's happening with broker market share. And we'll get into that just after this. So this week we had some research come out from Agile Market Intelligence, which is the research arm here at Momentum Media, and they do a range of different surveys. You might have already seen the Broker Pulse survey that we report about each month, or the third-party lending report that we do every year, asking brokers about their the sort of feedback on what the lenders have been doing. But they also do one called Consumer Pulse, where they survey, it's about 1,500 consumers each month, and they ask them different things around like what they're feeling, their sentiment, but also their financial and property ambitions. And often we'll ask them to ask a couple of questions for us. But one of the things that we were sort of looking at was around home ownership. Now, part of the reason for this is because of the upcoming home guarantee scheme that's coming out on the 4th of October in, removing caps and limits. We've talked about that before in the podcast. And I think everyone is super excited about it starting. So we wanted to know, well, are people looking at buying? Are they thinking about coming into market? And of course, that will feed into what brokers are going to be doing. So for the most recent survey, we asked them again what their home buying intentions were. Now, they kind of collated these figures between July to September and had a look at, well, what does this actually mean in terms of home ownership and what are people feeling and thinking? And one of the things that really shocked me was that nearly half of people who haven't yet bought a home in WA said they don't think they're ever going to. That shocked me so much because WA, firstly, we know so many people have been investing over there at the moment. Partly might be the reason why WA residents are thinking maybe they won't be able to buy a home. But I think it was 44% of WA non-homeowners, the people who are currently renting, said they had no intention of ever buying, ever, which really, really surprised me. It's the highest proportion of any other state in the country, and it's up 3 percentage points on the previous quarter. Now, this, I think, looking at across the board, where else we're sort of seeing home buying intentions, like, we always see New South Wales and Queensland doing fairly well. They're relatively popular. I think 31% was the national average of people, though, thinking they won't buy a home, which really surprised me. What do you think about this? Like, are you surprised by that? Do you think that's normal? Have you been to WA? Would you buy a house there?
It seems high, to be honest, 44%. Yeah, I wonder why that's so high in WA.
I think partly it was around pricing. So people thinking they're being priced out of the market in WA now, particularly in Perth. But yeah, I was just so surprised by that. Like,
is that the impact of investor activity, perhaps? Or?
Partly that, and I think, just generally lack of supply is always is the issue.
Yeah, I think it was almost a third nationally, which also surprised me about how high it was.
Yeah, but we kind of think, like, historically, we kind of know that when we see the figures of home ownership, about a third of people don't have a house yet, about a third of people have a house with a mortgage, and about a third of people no longer have a mortgage, but they own their property. Sort of super wealthy or the older generation. So we kind of know it's around a third. But I wouldn't have said that the third of people who don't own a property, who are renting, would never want to.
Yeah.
And so I was really surprised at that volume. And generally when it comes to sort of like home buying, I think Victoria was pretty optimistic. Only 22% of people said they never intended on purchasing a home in Victoria. And as we know, they've actually got a glut of property down there, lots of apartments, an apartment oversupply really down in Victoria. So we've seen those sort of property prices changing quite a bit. But they were also the most optimistic when it came to actually buying a home soon as well down in Victoria. So not only are they saying, yes, we're going to buy a home at some point, but I think something like 19% of them said they were planning to buy in the next year. So that's great news if you're a Victorian mortgage broker. You've got lots of people coming into market. And I think generally sort of looking at sentiment across the board, like other sort of shifts that we were seeing as South Australians also saying they're now looking at buying a home and becoming more positive about home ownership, whereas previously they were slightly less optimistic. I think the sort of number of people who said they never intended to buy a home had dropped in South Australia. But yeah, I was very surprised by that. So we'll keep on tracking that and seeing what people's home intention plans do over the next few months and over the rest of the year, particularly with the home guarantee scheme coming in, and if we get more rate drops, which I think now everyone's sort of saying November will be maybe a rate drop month. I just wonder what that will do to home buying sentiment. Talking of brokers, though, and giving them lots of research and things to think about, we did see some new stats come out from the regulators this week around what the different flows are at the banks in terms of lending. And one of the things that we were looking at was broker market share. Ben, give us an overview of what was found.
Yeah, so APRA put out their quarterly ADI property exposure statistics, which we reported on. And it sort of confirmed, I think, a lot of the themes we've been seeing and reporting on in the space. So big headline from this is the third-party channel is originating the vast majority of home loans for banks. I think in the June 2025 quarter, the new term loans from banks totaled 187.1 billion, with owner occupiers making up 63.6%, investors accounting for about 34.1%. And of these, the majority, or 68 billion, were originated by third parties such as mortgage brokers. I think it was 63.4% of all new term loans were third party originated, which is the highest share on record, and it's up from about 62% in the previous two quarters. So yeah, this kind of confirms a lot of what we've seen in the past and reported in the past. Sort of figures we see from associations such as the FAA say the broker market share is reaching record levels. So yeah, interesting to see it in the official data as well.
I know, and I can tell from even just the name of the APRA quarterly property exposures data, like everyone is obviously going through it with a fine-tooth comb. Yeah. So we've done the work for you. We've actually looked at it and gone through the spreadsheets and had a bit of a play around with the numbers, and I thought that was really interesting. It is also weird because in the APRA data, they just say third-party originated or third party. So we don't actually have, I don't think, a terminology. I actually went and had a look at their glossary to be like, what exactly is included in this? And so we're assuming that is broker. I can't imagine it would be many other third parties originating loans.
Would be
for the banks.
Third party that could originate.
Yeah, I was a bit like, I don't know, maybe a mobile bank is in here. I'm like, I don't really sure, but that would still be in my head proprietary. So I'm assuming I've kind of swapped third party with broker. So forgive me if it is not all broker, but I think it's pretty much all broker. And I think that is, again, seeing this is just bank data. APRA doesn't report on the non-bank property exposures. So, yeah, it's a big chunk, and great to see.
Yeah, absolutely. And shows, I mean, we've said it so many times, but the broker proposition is resonating with consumers, which is, good for brokers.
Yeah, good for brokers. And lots of, I think, people sort of looking at the data and being like, well, maybe if I do want to get a property and I do feel optimistic, perhaps maybe not those in WA, maybe I'll be using a broker to get my loan from a bank. So we'll be keeping on tracking that data too. We're going to take a break here, but when we come back, we're looking at some of the other things that have been going on this week, including some finalists for our awards, plus some of the events that we've been to this week as well. And we'll get into that just after this. So this week we concluded on The Advisor our SME Bootcamp Roadshow, which was really fun. So it went to Victoria last week and the Gold Coast. And then on Thursday we concluded here in Sydney. And really great to see lots of people learning about how to read business financials, how to write business finance, how to help more clients, with their business cash flow needs. And that was brilliantly executed by Ascendo Financial, who really put brokers to task. I love the SME Bootcamp as proper workshops. They put up like a cash flow and sort of, BAS statements on the screen, and then they actually go through being like, what are we seeing here? What does this tell us? And kind of workshop different scenarios and being like, how do we actually look at what this means for the company? And how can you then kind of support them in their finance needs? So hearing from lots of amazing partners, including our principal partner, Maxeron Capital, around mortgage lending, commercial mortgages. We heard from lots of non-banks around working capital solutions, lots of new products being launched as well. So it was really great to see so many people turn up for that. And if you do want to find out more about commercial finance, then check out the November edition of the Advisor magazine, which will have the Broker's Guide to Commercial Finance as a supplement in November. So you've got to stay tuned for that coming up. But also across the board, we've been seeing some more events coming up. We've got lots of finalists being announced this week. We had the Women of Finance Award finalists announced. That was really great. And the AI Awards, the Australian AI Awards, I think it's the first one we've done for the Australian AI Awards across pretty much every industry, but including broking. Lots of people from the mortgage and finance industry up for AI Awards, really looking at how they've been innovating, what sort of tech they're providing, what sort of solutions they're rolling out, and that's sort of across a lot of Momentum's titles, looking at those. So congratulations to everyone who is a Women in Finance finalist or a Australian AI Award 2025 finalist. Really great to see, and I've seen lots of exciting LinkedIn posts and Instagram posts, people tagging us in it, being like, hooray, I'm a finalist. So we're really looking forward to holding those events in a few months' time. Speaking of events, I went to a couple this week as well. Pepper had its 25th anniversary, Pepper Money. So we got called up to go and really hang out with quite a lot of people from industry in Machine Hall in Sydney. It's a new venue I've never been to actually before. It was really kind of interesting subterranean substation. But Pepper Money booked out the venue. They had the CEO, Mario Rahayem, make a speech talking about their history. And I had a chance to chat to him as well around what sort of Pepper Money's been doing over the last quarter century, how they've got to where they are. And pretty much what he was saying was we couldn't have got here without brokers, because so many of their loans are distributed through brokers. I think it's about 98%, something about that. Vast majority. And Mario with himself was actually a broker as well. So he's like, we've always been pro-broker. He specifically, personally, is pro-broker. But saying, we've, over the last 25 years, really gone from helping so many borrowers that kind of fell out of the bank credit policies. So yeah, it was a really, really fun event. Delicious spicy margaritas because they were Pepper Money. They had like little chilies on them, and lots of people wearing red and sort of, hanging out there. But it was really, really interesting to hear about, I think, what Pepper's been up to over the last quarter century and how they've grown. I think now they've got about $20 billion under asset. They've got about $69 billion of loans originated, thousands of brokers now accredited with them. And Mario was sort of talking about the fact that, they kind of really pioneered the near-term segment as well, the near prime segment as well. So while we used to have prime and subprime then becoming kind of more specialist nowadays, the there was a lot of sort of opportunity in helping the self-employed or those with maybe like a little blip on their credit file access loans that weren't as expensive as specialists. So Pepper kind of really pioneering this near prime segment where it was not quite as expensive as specialists, but not quite as cheap as prime.
Yeah. Lenders like Pepper, they do play a really important role, I think, particularly for those borrower segments such as self-employed borrowers and that kind of thing.
Yeah, non-banks really coming to the fore there. And I think when I was having a chat to Mario, he was saying, when they started in 2000, they were pretty much like one of a very few handful of non-banks in Australia that were operating. And obviously over that time have grown a lot. But that was a really great event, and it was really fun to see. Firstly, lots of senior leaders from industry there, but also just have a look back at what's been going on in the last 25 years. Well, that's pretty much, I think, it from us. Any nice plans for the weekend, guys?
I think we're going to have a barbecue, hopefully go surfing.
Yeah.
Nice, chill in the sun, yeah. What about you guys?
Yeah, not too much. Try and make the most of the sun. And football finals this weekend, so that should be good. Yeah.
Oh, and also, if anyone is interested in basketball, I found out this week that the NBL 2025 season starts. I think actually it started yesterday on Thursday, but the reason why I'm interested in that is because Mortgage Choice are now a sponsor of the NBL. So I was learning a lot about basketball this week. But I didn't know this. Something like 1.1 million people watched basketball in Australia, which I thought was huge.
Yeah, I think it's growing really.
Yeah,
really
the
big.
NBA is big here, isn't it? And the NBL, obviously.
NBL, yeah. And the NBA, but that's America. But yeah, really interesting seeing that. So yeah, lots of sport going on this weekend. I'm actually heading up the coast to Copacabana Beach. I cannot stop singing that song now. But yeah, so I'll be there for the weekend, then back on the tools on Monday as normal. Hope everyone listening has a great weekend, and we'll catch you next time for another episode on What's Making Headlines.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.